Hi guys, I wanted to do a year-end review of the bot, and you can see we've actually done really well this year. And I've made a document that's covered the milestones and lessons learned. So I just want to go through that document. But just to say is that we had 30% return, which is okay. We had made 3,196 pips, and you see that we sort of teetered up and down. Now, the reason I'm making this video is I want to talk about this fluctuation, and also just really to say thank you for your patience for all those people who stuck around during this time. I thank you. I really appreciate it. And you can see where we started integrating the Twitter API around about here. Okay, so we're reversing and using the Twitter sentiment alongside technical criteria. So we're using the technical criteria to say strong buy, strong sell, and then we're using the Twitter sentiment to reinforce that bias. And so I guess we can talk about the document. And it's quite lengthy because we've been testing since 2023 May. So, you know, it's a lot of testing. And now we had some bot before, but it required people to download some software, and it was not a free piece of software. The guy was going to charge for it, and of course, you know, that incurred costs, and also we didn't really want this guy hanging around and you know charging people. So I didn't really want to do that, and I wanted to do something that would be for free for anyone. You know, if you want to join us at Patreon, then you got access to the spot completely for free, and we don't have to pay this developer or anything like that. That's all been paid for now. So it uses a thing called the listen orders Google Sheets, and pending a sell changes on the spreadsheet, it will ping and fire a trade to MetaTrader 4 or 5, pending what terminal you use. It can be either. So that's another bonus as well. And so obviously, in principle, it worked out the box. It was really simple, but we had difficulties here. we were trying to get the logic right, and then we need to get the TP and SL correct as well, the take profit and stop loss. Now the bot had a big drawdown here, and what had happened is that we were trading the bubbles, which are basically the currency baskets, and then we then reversed the bubbles, and it ended up profiting, but then we had like some drawdown again. Now the reason for that is that we were too open for risk, and we were opening too many trades and various instruments as well. For example, it would trade the New Zealand dollar USD, and it would trade the dollar CAD, and it would trade, you know, Aussie. But we don't do that now. We just only trade the Euro USD, and that mitigates all that risk, because we could have RBA coming up, we could have the RBNZ, we could have the Bank of Canada. We don't need to worry about those central bank noise. We can only really be concerned with the Euro, the ECB, and the Fed. And so obviously that was the big change that we made here. This was actually a very big surprise, because when the bubbles would diverge, you would assume that they would have held on to a drawdown, and then they would be stopped out. But what we discovered is that the herd would go one way, and they wouldn't hold necessarily on the currency pair, they'd exit, which was a huge surprise, and that took me by surprise. And of course, by then not anticipating that reversal, we would encounter big losses. So as at that point, I thought, well, what if we reversed them? And then it went up. Okay. And then of course at this bit, we had it would open up multiple signals and different currencies. That Bitcoin Cash was simply something that I had to test on the weekend, because I was testing the Telegram integration. So that Bitcoin Cash, it shouldn't be there. I just had to trade something over the weekend while the market was closed, and I just sent a 0.01 just to test whether or not it was going to come through to Telegram, and it did. That's fine. And Yeah, that's okay. So, just talk about the logic there and a little bit of code and things. And so we had some losses, only small losses, which is fine. This is the bubbles. And yeah, that's fine. And that's basically just to say I wanted to do the copy trade. And because in order for you to get that set up on everyone's machines, it would have been quite a pain. It would have been quite extensive on the time. Now, however, setting up on the copy trade should take maybe 5 minutes. It's really simple. And from my perspective, it's really, really quick. All I've got to do is simply add your FX Blue ID into the website, and then that's it. So all you need to do is install the EA, the receiver expert advisor, load it, and fill in the fields. For example, your FX Blue ID, your password, and also the quasi reality is the channel. So it's only three fields that you need to fill in. So it's very, very simple. And so this is still early days, and we were looking at the failure rate. Now the failure rate that tells us the measure of the herd success or failure for that particular day. Now, a high failure rate would be normal because the herd should be wrong, they should be counter trend. And so we were looking to integrate this into the algo. And it's a great idea and concept, but it basically made things a little bit more complex than they needed to be. And we've actually gone for a very simple method now. It's a great idea, but it's relying on that. And sometimes they can get paid. As we found out on the thin liquidity, the volumes that we've been seeing, they have been getting paid recently. Okay, so normally it should be high, but not necessarily the case. And if they are getting paid, we need to be careful. Okay, and yeah, it was hit and miss basically. So there's the instructions. So it's dead simple. And if you want to join, then just go to that address, download the EA, input your ID, password, and channel, and that's it. And then just keep your machine running, and you get a heartbeat from me. And some more discussion about the failure rate. We ended up not doing this for simplicity. It's a great idea, but it's added like a layer of complexity we didn't really want to do. And this is macro stuff. So the reason for making this video is just to say the amount of testing that we've done. I just want to document it. Alright, so in case you joined us and then you would like testing, perhaps during this period of time, and you may be looking to come back, you'd be more than welcome, but there would have been quite frustration during this period of time, and it went on for a while as well. So just wanted to make a doc really to cover the lessons learned that we had as well. And there's the SLTP, which we are not doing. Well, we are doing the SLTP, but not at those values. And we're not using the trailing stop either. We're not using the 50 pip, 25 pip. We're not doing that anymore. We're using a 1-to-1 R, more or less. Okay. And this was an absolute nightmare to get right. That was very, very problematic because the tighter the stop loss, it would mean that the stocks would get raided overnight, especially if something like the pound Australian dollar, that spread widens hugely at the FX close, and that would have resulted in a loss just because of the tight stop. Okay, so that had to get looked at. And yeah, and this is me thinking that we should have wide stop to counter that issue of the spread widening at the close. So I was thinking, well, 100 pips, that probably should do it. But what if it goes wrong? Then it goes really wrong, and that's actually going to be quite costly. So we went from 100 pips to 50 pips. And I was really, really keen to avoid the FX close spread widening, because that would be really frustration, because we could be right on the trade, but just because the spread widening at the close, it just nullifies that trade. Where if we had a slightly wider stop, it would have been fine. and it meant that we'd get stopped out unnecessarily. So obviously, by only trading the Euro USD now, we don't have to worry about that because it doesn't widen in a huge amount, not like the pound Swiss or any exotic pair. With the Euro USD, we'll probably see like a 10 pip max spread widening. You know. And so obviously the frequency that needed to be looked at as well. So the wide stops caused us issues and minus £20. So just it's basically just an exercise to say these are the things that we did wrong and this is the things that we learn over the time. And so obviously the Asia trades, that is now negated. We don't trade over Asia. And we are looking to have a technical entry criteria. So we'd only enter if we have a strong buy or strong sell. But it's not on the 5 minute. That's a bit of a crazy idea. But the idea is the same. We still only trigger if we're strong buy or strong sell. But we use the hourly, not the 5 minute. Okay. And yeah, so that's important. That's a key feature for our bot. Okay. I had issues with the Google app script. It encountered errors and it did something to the macro, and I didn't realize that it happened. And I was trying to work out what was going on, and I thought it's because the Chrome it was going to sleep. You may have noticed that some tabs go to sleep on your browser. It's designed that way to save energy. But it actually was not anything to do with the browser going to sleep. It was simply something that Google did on their back end that affected the macro. So that was quite a costly time because I was looking at trying to understand what was going on, and I couldn't understand why it was not triggering the trades. And then finally, I worked it out, and it's a little bit frustrating. And that's the issue with the bubbles as is. This is before we would reverse it, because we go with the herd and we're fading them. What if they exit? So we're leaving it too late in the day to enter, and then that leaves us in the risk that they may exit. If they exit en masse, it's going to change the sentiment. So we were too late in the day for entry, and also we run into the risk of then exiting, and that was obviously a little bit of a trouble because you can see we had a big dump, and that's because we were too late for entry, and then they would reverse. And I thought they would actually hold on to drawdown, but they clearly didn't, and it really did sink. This is also before we had our proper sizes as well. It's worth noting that was a big drop because we weren't using like normal sizes. We were just not interested in the sizes at that time. We were more looking at the logic, and the risk management part would come later. Okay, and so that was a bit of a problem which we managed to fix. And this is me trying to work out why the macro wasn't working and why my machine was going to sleep. It was nothing to do with this. It was simply the fact that Google had done something on the back end on the Google app script, and it meant that they deleted my macro. I certainly didn't delete it. I know that they were upgrading the app script from a particular version, so they may have caused like a conflict. But this caused me a little bit of a head scratcher. And it was something to do with the app script. So but in case you don't know what that is, it's the place where macros and the API sits, for the spreadsheet. And got it fixed eventually. It's June. So we're a month into testing now. And that's fine. That was a great idea of having a ATR, stop loss, and TP. But that actually, by doing that, it broke the connection between the robot and the sheet. So even though it was a great idea, it did actually break the bot, and I had to fix it. So that was kind of annoying. And we don't really need to worry about that because we're only trading the Euro USD, and I can manually input the ATR values for that pair because it's not really a problem. We're using 75% of its ADR, so that's an easy thing to calculate. And also on the spreadsheet, there is there is those metrics as well. If you come here to the hamburger menu, once it loads, there's a SL there. And so we know that 75% of the Euro USD is 61 pips. Okay, so that's where our stop loss and TB should be around about. It should be near there on that value. Okay, so that's just something I need to do manually. Okay, so we couldn't do that automatically. Having that automatically update, it broke the sheet, and I had to go and fix it. And I didn't have to pay the developer or anything. I just got it working. It was such a head scratcher, but and also there, you see, I send a dummy file. So that would have, just been it would have been conducive to slightly, some losses going on there, just because I had to test the connection again. Okay, and that's fine. That's a milestone, is that I could have the trigger send upon sell chain. So pending that the spreadsheet changes, it would automatically ping a trade to MetaTrader, which is huge. Before we were doing it at time intervals, and now going by that, we did it on the frequency upon the sell chain. So if the sell went from strong buy to strong sell, then it would trigger, instead of me like manually doing it automatically by macro. So that was a big thing. That was quite cool. That was very helpful for our automation, and we're using that now. Okay, we're making progress. That's fine. We had problems with the Swiss, big problems, and it can make you go bonkers. And it turns out the Swiss National Bank was manipulating the price of the cross Swiss. They are known to do this from time to time. So another reason why accepting and triggering all trades was risky. So many different dynamics. So we don't trade the Euro Swiss now. We don't trade Swiss at all. We don't trade the yen. We don't trade the pound. We only trade the Euro USD, and by doing that, it's mitigated so many risks. And this was very painful. It was very quite annoying. And there's the Swiss pound, boom. And this is us not reversing the bubbles at this point. So the herd would have got paid there, because if it says buy at that point, is that they'd sold. So they'd sold here, and they really got paid. So quite frustrating, as you can imagine, as we're trying to develop this bot. And I was getting close to think about quitting at this point, because what are we going to do? What happens if the herd get paid like this? What are we doing as sentiment analysts? Are we wasting our time? It had all those doubts creeping in, and it turns out the Swiss National Bank was actually, they stepped in and they were doing stuff. So while the herd were right, it happens, it can happen, but they come in at that point. It may have been a pound move, it may have been a BOE, I'm not quite sure at the time, but whatever happened is that they got paid in a big way. Huge, it's a big drop, isn't it? And so there's the butterfly effect. So, obviously if the Fed do something, it's going to impact the rest of the world. And of course, it has those repercussions. Okay, and I'm saying we're never going to do Euro Swiss ever again. It was horrible, and that's at that point. I think we probably would have triggered, and of course, what happened is that the herder got squished, and then they reversed, and so that's the logic that we were implementing. We're going to implement after this date. So we had a terrible entry at that point. So I had a discussion with Debs, one of our testers, and she said, what if you reverse it? And I was like, oh, let's try that. And of course, what happens when we reverse what happens is that the herd will get liquidated, and then they get out. And then them exiting creates that dynamic of the setup. And so that's them getting squished. Okay, so our entry was very poor in its first iteration. This is like robot 1.1. And so we're obviously encountering some issues. And, it's talking about the stop loss, take profit, went ongoing for ages. And we had lots of, the failure rate, we decided to get rid of that. we didn't do this anymore. That also meant that we were too late in entering, and we don't look at that either. So we basically made things a little bit too complex in Robot 1.1, and it did encounter some losses at minus £23 there. Um, and this is a good thing because we had some discussion about trades getting to their stop loss over Asia. And what we do now, we only ever open a trade during European time, UK 8 a.m. onwards, and it will go on to maybe 10 p.m. UK time. It will never open during Asia because we want to avoid that spread widening, and it was a complete nightmare. It was very destructive for our profit. And there's the yen. That yen was being tricky, and we had some BOJ noise at that time in August, some talk about hikes or whatnot, and it caused lots of butterfly effect with the yen. And so this is me and Debs having that chat about reversing the bubbles. So, in theory, it makes sense because they've only got finite funds. They might not hold on to that drawdown because they don't want to blow their account, right? And then exiting obviously has the repercussion of the price action moving. And so that's them. This is us reversing the bubbles after them getting liquidated. And so basically, when the bubbles are extremes, stops are going to get hit. Stops are going to get hit. All right. So this is the extreme bubble divergence. And before in 1.1, we weren't trading that. And 1.2, we were, and we were reversing them because obviously, they don't want to get stopped out. They're undergoing huge drawdown. They probably don't want to hold. They want to exit, right? So that's the logic of 1.2. And so there's the bubble extreme stops, and we were looking at the time and stuff like that, and it makes sense. This does make complete sense. They're not going to hold on too long because they don't want to have margin call, and video there, and that's still valid. You can use that. That hasn't changed at all. It's just a simple setup if you want to copy the bot. And just to say, the baskets are made up of this. So whenever I say about the bubble, this would be the New Zealand dollar bubble. It's comprised of all its peers into one bubble. So it looks at the New Zealand dollar versus all of these. And then we look at the dollar, for example. Say, for example, we had yen or whatever it is. I can't see there, but then maybe CAD. We're just basically looking at yen bubble versus the CAD bubble. And that's it. So just so you know what the bubble means. And we had some losses here because these were BOJ, these were yen trades, and it encountered quite a loss considering we're only using small sizes. So we were quite wrong on that. And this is after us reversing the bubbles. So we were losing when we won, and we started to lose money when we were. So what happened is that I think the yen, it just encountered some noise from the central bank, and it just meant that we'd go to our stop loss and we were encountering losses, which has now been mitigated because we're not trading any yen, we're not trading JPY, or we're not trading the Swiss or anything, we're not trading the pounds. We don't have to be too worried about the BOE. So we just basically really risk mitigated on the bot. Come down, so more losses, so that was quite frustrating. And this was going into a PAL speech, and so while we'd have like some losses, the following day we'd have a big profit. So it was all very haphazard, hit and miss, and it was a little bit random, and we wanted to take some of the randomness out. So that's a great return. However, you're looking at losses prior, so it was very hit and miss. And it could have been minus 467 because that's how random it was. It's really, would they hold or would they reverse? And we didn't know that. We could not predict the future. We could look at the past, but it's not indicative of the future. And so, it was very up and down, all that time. And we wanted something a little bit more smooth, a little bit more reliable. And apparently the BOJ did have some intervention at that time, and meant that we'd have some losses on our AJ, and of course, it impacted risk sentiment. So Aussie Swiss would have been impacted too. So that they encountered losses on that. Okay, and it caused me some stress. I was looking at actually quitting and looking also intervening. So doing a quality check before we go live. And so I didn't want to do that because we want it to be fully automated. There's no point me having to sit around and just monitor. It needs to be looked after. It needs to look after itself. Okay, and more losses. A little bit of win, so up and down, very random and uncertain, and more losses. And we had some Middle East stuff at that time, which impacted the risk off vibes because they were talking about World War III and stuff like that. And of course, it sent huge spirals of risk off. So our risky currencies like the Aussie, they perform poorly despite the sentiment. Right, so the fundamental forces kicked in and it overthrew the sentiment, and we had some losses. So we had to try and mitigate that risk, and we could have easily been mitigated just by trading one currency pair, which is what we do now. And I stayed up late, and basically we're going from 2.1 to 2.2. And even if we changed the reversal, would mean that we'd win or we could lose. It would just be very random because of the fundamental nature of risk appetite. It would be risk on, then risk off, but very strongly. And those moves would be impacting our risky currencies. And some macro stuff. We're doing upon sell change now. So we were doing it upon time, but we don't do that now. So that was basically triggering a lot of trades. If you think about it, every 2 hours it would ping a trade. Over the course of a week, that's a lot of trades. So we only do it upon sell change now. So that's important. And yeah, some risk off fundamental stuff impacting us in a negative way. And this is just to say is that you will need to get a zero spread broker because you'll have an error to say it failed to trigger because the order was too close to the market or your stop loss was too close to entry. We use a zero spread broker at IC Market, so you will need to use a zero spread as well. And also that account should be hedging as well. If you don't have a hedging account, you wouldn't get the profit that we've seen on our statement. That you wouldn't be seeing that. You need to be hedged, okay? And that's fine. Yeah, and so we ended up trading Euro USD only. So we avoid the huge noise from the other central banks. And also we don't do the trading stops either. And so this is the trading stop. We would trigger like small profits here and there, but of course when our full stop got triggered, it would be quite horrible. Right, so loss, substantial loss, and of course we end up closing negative because of the full loss. And you think maybe the trading stop would have been a good idea, but at that time it wasn't. And unfortunately, the full loss meant that we'd have a negative result, despite all those trades being pinged. And now we're coming up to the Twitter API, so we're coming up now to modern times, to present day, and basically just scanning Twitter sentiment in order for us to get a bias for the Euro USD. And still looking at SLTP, despite it being like a year on as well. This is like about a year since we started. We started in March, and so we're coming up to nearly a year here. And I was talking to one of our Discord guys, and he said, "Why don't you put some technical checks in?" I thought that was a really good idea, so we did that, and we've kept that since. And we're getting there now. We just need the SL and TP part, and we start to make some profits. So February was really good, and you can see it's here, isn't it? So February, yeah, February-ish there. It's February to March, so we're starting to pump a bit. Yeah, so that was good. And yeah, just basically coming to the end of the testing. And so what had happened in Discord is that the channel has got quiet now because there aren't any more testing to be done. We're pretty much there now. We're ready to go live. I'm just doing some optimization on the bot, on some coding, which was required because the time, we shouldn't have a 30-second delay between the buy and the sell. It should be instant. And so you can see 1644, 16, 1644, 45. That's a huge delay. If we're trying to hedge, 30 seconds is a long time. In the scheme of things, in this modern time, 30 seconds is like an age. It's a long time. So that had to get optimized, and that's now fixed. And it's important that you get a zero spread on the Euro USD. Okay. Gains. So June was good, and technical entry criteria, and that's using the Twitter API. So we're basically using these two things now, and we've really simplified it. Up we go. And it was a good August and a decent September. So, it's not bad. It's not bad. And then that's it. Getting the signals into Telegram was a huge milestone. And that's what it looks like in Telegram when I had 3 subscribers. And that's it. So that's just the lessons learned video. And for the bot. And we're good to go now. And just wanted to document what we'd encountered, how we overcame them, and what the bot looks like now, and the logic that it uses. So by 2025 December, this would be a lot higher because obviously, but this is testing, and we are not doing any more testing now. So we should be seeing further gains for 2025. I wish you a great new year. I'll speak to you guys soon.